What is up, folks? Welcome to another Sunday Satoshi Live. My name is Colby Noe, and my regular guest and my good friend, Bitcoin Ben, is joining us for your regular block broadcast. We're getting started at block 781, 562, and let's have a little simultaneous sip just because I'm having trouble getting words out of my mouth, but there's a lot of news to get caught up on here.
Stay hydrated, my friends.
Oh sure. A lot of spicy news. Ben, what do you got going on, man? How you been?
I've been well. Life is good. The news is crazy, but life is good.
I can tell, dude. You look like you're living your best life in that dude. I'm digging the style today. I'm loving it.
Yep. Figured I'd put on a orange and a beach vibe kind of shirt for the stream today.
It's right for the occasion. I don't know if you heard, but there's it's called Nostr, I think it's called. It's an event in Costa Rica. Yeah, Nostr. And I definitely have a little FOMO because shout out Tatum, who joined us a couple episodes ago. He's down there hanging out with the plebs, and they're just out there on the beach zapping each other and doing their thing, talking about decentralized technology and
nice.
Having a great time. So that's what's going on down there. It kind of reminds me, your shirt kind of reminds me of that Nostrica event that's currently going on as we speak.
So that's like a convention hosted by like Nostr, that new social media we were talking about.
Yeah, and it's not really like hosted by Nostr, just because Nostr's it's decentralized. But just a bunch of people that are building on that are down there celebrating the times, and it's funny because we've been in a bear market in Bitcoin. Doesn't feel like a bear market. Yeah, I mean, it does and it doesn't, right?
For Bitcoin?
Really, yeah, like the vibes. You'd think that people would be super down bad and depressed, but not in Bitcoin. And it seems like these are the times to celebrate because you can get sats for, you can stack cheap sats at these price levels. I mean, Bitcoin is ripping up, but it's still only $28,000 a Bitcoin, which, from my perspective, my opinion, of course, do your own research. It's cheap. It's cheap,
right.
Cheap sats. So it's reason to celebrate and stack harder.
Right. Yeah, it's definitely Bitcoin's definitely still on sale in a major way. Even though I would agree that I don't remember when it was, but some point like about 3 or 4 months ago, I feel like the tide kind of turned, to maybe more of a getting a little more bullish with the vibes in the Bitcoin market, even if the price hasn't ripped, to any crazy new heights.
No kidding, dude. I'm gonna put this little graph up on the screen, the folks. Look at this. I'll zoom the graph a bit more if I can. Let me figure it out. But
what do you call that again? The block visualizer?
Yeah, this is bitfeed.live. Shout out that. Nice. I love looking at the mempool all day. But check this out. Bitcoin's up 69% on the year. Sorry, my view sucks. Let me fix my view up, folks. But Bitcoin's up 69%. Gold's up 9%. So
there we go.
Yeah, I'd say we're having a decent start to the year, folks. Buckle your seatbelts. A lot of things falling apart. We're gonna go over some of that news. A lot of things falling apart. A lot of uncertainty. The market's closed. As far as the TradFi markets are concerned, but Bitcoin party don't stop, right? So Bitcoin's open 24/7, 365, and we see how Bitcoin is trading on this news. It's very interesting to see. And apologies for my tech, folks, but let's go back to our screen here. Yeah, up 69%. We're having a good year, I'd say, my friend.
Yeah, amen. I think something I read today stated that, even if Bitcoin is down from the high, over the past like 5 or 10 years, we've had like a 1,500% appreciation year over year average.
It's unbelievable. And need I remind the good people watching this broadcast, and I appreciate you guys tuning in for episode 7. Need I remind you guys that the halving is 1 year away. The halving, I've had this, I'm firm in my convictions that the halving is going to rip faces off and melt faces.
So the time to get in is before the face melting, if you wanna benefit from it.
Well, stay humble, stack sats, don't leverage, and
right.
Bitcoin gonna Bitcoin. Again, we'll go back to the screen here, have a little look at what's been going on.
I mean, we know that that's just a humble Colby prediction, but understanding the fundamentals, you have to be right at some point.
Well, zoom out, you look at the long term. I've always been kind of a fundamentalist. Same for when I was stacking gold and stacking physical gold and silver. I'm interested in the first principles, long-term aspect, because I feel like that's the advantage I have over these shiesty banks.
Right.
Because I don't think that you can win in the casino by trading. I don't think you're going to beat the casino at the casino game with their high-frequency trades where they're front-running everything that you're doing, etc. But yet,
right.
it's the long-term conviction, it's the fundamentals, which is why I'm super interested in the technology, because it's digital gold. That's why I'm here. It's digital gold. It's gold that has all the positive traits of good money, but 1,000 times better than gold. It's internet gold that's native currency to internet technology. And it's interesting to think that Bitcoin is the protocol. It's the base layer of money that will be built upon. And it's very similar to gold in that respect, because gold is base layer 1 money technology, and it has been for thousands of years. So when
gold's
push comes to
layer,
shove,
gold's base layer physical, and Bitcoin's base layer digital.
yeah, and gold is a 13, 10 to 15, somewhere in the middle, $1 trillion asset. You can't really say how much it is because we don't have exact numbers, right? But it's a more than a $10 trillion asset. Bitcoin is just over 500 billion. So it's dwarfed in current size, but hence the asymmetric bet that people like you and me can benefit from it potentially. And I'm personally certain of that. My opinion is that of certainty, absolute certainty. The certainty that there will only ever be 21 million coins. It's more scarce than gold, in fact. It's even more scarce. And that is a big deal, my friend. And you already know this, but this is, again, I keep repeating myself, this is why I'm going live on YouTube. And I think this is why you're joining me, because if we're right, if our use case of Bitcoin is correct, it is a once in human history type of event where money gets truly redefined, where Bitcoin actually replaces gold It's
Yeah,
not
it'll
just
be
it's not just an improvement or an alternative, but if Bitcoin actually replaces gold as layer one money, that is an earth shaking event.
yeah, that'll definitely be the biggest moment in financial history, financial human history. Absolutely.
And it won't happen just all at once, right? It is very much a process, and the Lindy effect sets in where, bro, what are you doing? Are you doing some Tai Chi? What are you doing?
I was trying to figure out where the where your logo was at in here. I like your logo.
I
I noticed it on
appreciate
my
that.
forehead a minute ago. But
So
yeah, speaking of which, you had a really cool diagram that I've seen, in other formats, but on your website, Jasmine sent me. You had like the chart with the different aspects of Bitcoin versus gold versus fiat, and I think you gave on that chart, Bitcoin has like a B or something for durability compared to gold. It's A, just because Bitcoin can be lost or destroyed potentially more easily than gold, but that just lends to the scarcity of the asset, which is overall the biggest value proposition that it has anyways.
yeah, I appreciate you name dropping my site. Um, so this is the graph that you're talking about right here? This
Yeah, that one.
yeah. Yeah, it's definitely, and this isn't just like, there's many such diagrams that compares, Bitcoin to gold, fiat, and other monies, right?
Yeah.
Things that are used as money, and the only place that Bitcoin comes up short is the established history part.
Hmm.
And is that a advantage or a disadvantage? I mean, that potentially means that it's very undervalued if it just hasn't had the time. Obviously, Bitcoin's been around 14 years, gold's been around thousands of years, so
Right.
it's well established, and yet Bitcoin is, I mean, I'm at a loss of words. I could just go on and on. If you want to jump in
Yeah.
and share like what you thought was interesting about that. One thing I think is interesting is how, if you look at the fiat system, I thought this diagram is kind of cool that we put together,
Yeah, that one
where
was cool too. I appreciated that also.
where effectively Bitcoin's use case is that it's flipping the definition of money right side up,
Hmm.
and by doing so, it allows people to unshackle themselves from the debt Ponzi scheme, fiat pyramid scheme, which
Right.
is
I feel
which
like you
it,
could literally lay those two visuals on like a timeline, time going, forward, bottom to top, and that would that helps represent, the time preference modification of having sound deflationary money, and as well as not being like a zero sum fight for the pie kind of game that fiat tends to create.
yeah. I mean, the way I view it is, and this isn't to be absolutely puritanical. Of course, there's nuance to all of this, but it is factual to say that fiat is a debt-based system. Basically,
Mhm.
all fiat is backed by debt. So it's funny when people make fun of like, oh, you have magic internet money, right? Like,
Yeah.
and they make fun of like Bitcoin's not real. It's like, what do you think's in your bank account? Do you think
Right.
that's real money? Like that Morpheus meme where he leans in and he's like, do you think that's real money in your bank account?
Hmm.
Hmm.
that's
Hmm.
what I
Right.
that's what I said to my grandma a couple weeks ago when I was talking to her about Bitcoin.
Yeah. I mean, I would get it. I would get it if somebody's like, I just barter with my gold and silver I mean, that's not really barter, right? But I use
Hmm.
gold and silver. I use hard money for my transactions. And if that person were to lol at your magic internet money, okay, like I can kind of see where you're coming from because you actually can hold physical gold and silver in your hand.
Hmm.
But by that same it's hypocritical and it's ironic for someone to think that Bitcoin's not real, but to think that their fiat is real.
Hmm. Right. Also, that
Bit
guy with the gold and silver, he's gonna have to either deal with some fiat or some magic internet money or something like that if he wants to, transact over the internet or over a long distance that he's not physically traveling himself. You know, he needs a courier. He doesn't have that efficiency of transacting it at across time and space that Bitcoin provides.
right. And it's hard to get away from the fact that we live in the information age. And as a gold bug, as a silver bug, for I very much my what pointed me in the direction when I realized that banks were getting when they were just printing money in
Hmm.
2008, 2009, when the quantitative easing QE1 started, which led to QE2, which led to QE3, which led to Operation Twist or whatever the hell that was.
QE
Um,
infinity, QE ongoing.
yes. So when that started, that's what got me asking in my 18-year-old, 19-year-old brain, hey, how do they just print money? Like, how's
Hmm.
that even a thing? And then I read The Creature of Jekyll Island, and then I started just looking at
Nice.
how does the Federal Reserve even function? And basically they do literally just create money from nothing and they purchase government debt, and that's the main facility for money creation.
But don't worry, it's not done. Nothing. None of that's done at the taxpayer expense.
Right.
Lols.
Yeah. Um so yeah, here we find ourselves yet again, yet another Sunday. We convene and and it is chaos. It is pandemonium. It is mayhem. And so I thought I would bring you in as the madman, the madman himself, to just kind of shine some light on the situation. Go over the articles about Credit Suisse getting absorbed by UBS. Just last weekend we were talking about how Silicon Valley was going tits up, for lack of a better term,
Hmm.
and and here we are. So it is spreading. There's a contagion, and I know a lot of people want to say, hey, don't overblow things. It's a good thing that we have very responsive central banks that are willing to step in and guarantee that they're going to backstop these bank failures, and that's and maybe we should be looking at that as a good thing. But I think that there's also people who are really concerned that that they're just going to print more money,
Right.
and that leads to things like inflation. So you've got two kind of schools of thought. You've got the kind of the Keynesian way of looking at things, like, oh, you can just kind of have centralized solutions and central banks can just print money, and that's the lever you pull for any economic problem can be kind of solved from a central bank kind of perspective. And
Hmm.
they look at it as just if you have a problem here, you inject liquidity. And it's interesting, in this environment they keep hiking interest rates. So the big question on everyone's mind is, like, are they going to keep hiking rates? Are we looking at a 25 basis point hike going into the next Fed meeting? It's starting to get a little hairy, and it's starting to get You know, things are starting to come apart a little bit.
Check, check.
Check, check. You're coming in. You sound like a robot, but I can hear you.
Cool. Somebody tried to call me, and apparently that was enough to make my phone have a brief aneurysm.
Word. So basically,
but we back.
We back. You know, there's a lot of uncertainty, and people are starting to get scared. I think it's interesting how we talk about this on a Sunday. Bitcoin's trading, as it always does, and markets are going to open tomorrow. And yet again, it'll be interesting to see how markets react. We already see how Bitcoin's reacting. Bitcoin's up above 28,000 last I checked. So responding very, very positively. It's just going to be really interesting to see where we go from here, folks. Put your seatbelts on. What do you think, Ben?
Yeah, I mean, I was gonna say, over the last, I guess we've been doing this podcast or this stream here on Satoshi Sundays for a month and a half now, or going on close to 2 months. And, if the trend keeps up like it has for the past 3 weeks, then, we're going to have more and more interesting, topics to cover. And it is interesting and, funny timing that we have the conversation on Sundays. So it's always like, who knows, tomorrow morning, are things going to, accelerate or, decelerate throughout the week? Gives it's an interesting.
Well, it seems like things have only been accelerating.
Pulse. Yeah. Yeah, for the last 2 weeks.
It seems like they've
especially.
only been accelerating. And what do you think? Are you happy that you hold some Bitcoin?
I'm definitely happy that I hold some Bitcoin. I'm definitely happy that I'm not exposed to the stock market in any major way. Let's see. I mean,
are your sats in cold storage?
My sats are, that's my personal business. But my sats are secure, and I was actually meaning to consult with you about some security things, but we'll do that, not on a live stream. But that's the beautiful thing about Bitcoin, I guess, is that you can, it's a learning process, and we all have to be responsible, and your level of security is kind of dependent on your, you
got to take there's no bailouts in Bitcoin. If you're irresponsible with your keys, and if you're irresponsible with your money, then there is no Federal Reserve that's gonna come bail you out. And so Bitcoin's about responsibility. It's about learning, and it's about responsibility. It's about not trusting but verifying, and so. But you said your Bitcoin's secure, so that tells me all I need to know, which is to say that you do control your keys, and it is in cold storage, because otherwise it's not secure. One interesting comparison before we get to our articles that I'm looking forward to. One interesting comparison between Bitcoin and gold is there can be, but obviously not always, when you look at FTX or you look at Celsius or you look at any of the exchanges that do have risks involved. But similarly to gold, you can, if you're responsible and if you are educated enough, you can take custody and thereby eliminate counterparty risk. So if you think about it, there really aren't very many assets wherein you can do that, wherein you can custody and eliminate counterparty risk. You can't do that in real estate. You can't do that in commodities, really. Like, it's it's interesting. It's one of the only assets where you can eliminate counterparty risk entirely.
Right. Yeah. I mean, even unless you're like, the Principality of Sealand or something like that, uh, then all of your real estate is pretty much being, gate kept by whatever government you're living under. And
Yeah, at the end of
so
the day,
that's a bummer.
if it comes down to like someone who has more more firepower can just come take your property.
Right.
And that's
Right.
true
And
for gold as well. That's true for gold as well, right? Somebody with enough firepower can just come take your gold.
Right. But if I'm not going to tell you, or I don't have my keys memorized in my head or something, and I've got my keys responsibly geographically dispersed, then my Bitcoin is safe.
Word.
So that is a beautiful thing. And maybe it could be a thing that people, if people educate themselves about Bitcoin and understand some of the principles of money, maybe understanding some of those principles might translate into us having some wise conversations and thoughts about how we treat some of these other assets like real estate, and the relation of real estate and the government jurisdiction that we're in, whether it's
that's a multi-trillion that's a multi-trillion dollar question right there.
Mm-hmm. Yeah, is the government here to protect your property or to tax it? Because I don't think that
and do you really own
was the original purpose.
Fair enough, but also think about how people use their homes as their savings accounts. Basically, the middle class, most of their net worth is stored in a single family home. Which and it's effectively it's used as a savings account, as an inflation hedge, because they aren't professional investors and they don't know where else to put their money, and they know that their cash is losing value. So they feel it's pretty common held belief that you have to put your money into a home, which means what? It has a monetary premium. Like, homes are there's a premium because it's being used as an investment by most people. So therefore, if there's a superior money where it actually stores value and doesn't lose value like our current fiat money system, if there's a superior money entering the scene, which I believe there is, then it can take the monetary premium off of certain asset classes like real estate, where even a single family home is being treated as an investment. Basically, all homes are being treated as investments in 2023.
Right. It's almost like the before the advent of this mystery technology that you've referenced to. Before that, it was almost like the home had become the hardest form of money, maybe next to gold, that people could hold. But
people have this belief that you can't lose money in real estate, and I
that's kind of silly.
I mean, real estate values are pretty insane, and affordability, cost of living, wages being stagnant. There's lots of problems for and BlackRock buying up now, getting in the business of buying single family homes. It's interesting to watch this play out, right? And speaking of BlackRock, they tweeted. I saw a tweet from BlackRock that said they weren't interested in taking up in acquiring or stepping in and taking on Credit Suisse. So
I saw that too.
Things are bad when BlackRock doesn't want to step in.
When they put your 75% discount on a bank.
So let's get into these articles, and then I want to get into some tweets, and I want to get into some memes. Let's take a quick meme break real quick. I think you might have cut out on me, Ben. I think Ben might have cut out on me real quick. We'll take a quick meme break, and we'll go from there. All right. Bum, 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 bum. You know, it's funny because last month I cut out, and then Ben had to cover for me. So here I am, getting a taste of my own medicine. Ben cuts out on me, and I've got to do it live. Let's go. So, meme break, folks, meme break. And then we'll get into the serious business. All right. So here's a meme for you. Look, you were right. Bitcoin is going to zero. We told you it was just a matter of time. JK, that's actually the purchasing power of the US dollar. That's how it's supposed to be. We need inflation to stimulate the economy.
Hello. Pardon me.
We took a little meme break. We do a little memeing.
Right. Yeah, I was kind of slightly upset what was going on without me, but I guess it's my fault for having the phone.
It's only right. It's only right. I mean, I did cut out on you on my own stream, and you had to cover me for me last week.
Right, and you were gone for like a month.
I know. I'm sure it felt like forever, right?
Yes, definitely missed you very much.
So I just did your meme. I just did your meme that you sent over. Nice. I'm gonna go to the next one.
I heard you doing the voices and everything.
Yeah, buddy. Let's do this. Let's get to our articles. Let's get to some tweets, and we'll close out the show because we're at half an hour now. So basically, UBS is the biggest commercial bank in Switzerland, and the Swiss National Bank is picking up UBS to absorb Credit Suisse, and they're gonna buy Credit Suisse for $1 billion, and there's gonna be effectively a merger, and the Swiss National Bank has pledged 100 billion franc liquidity assistance to UBS, while the government is granting a 9 billion franc guarantee for potential losses that they incur. Mm-hmm. So, what do we make of that? Last week we were talking about Silicon Valley Bank. We've got First Republic having issues. We've got Signature Bank going down. The Fed quickly announced a week ago that they were going to make all the depositors whole, even though most of them were uninsured. In the case of Silicon Valley Bank, the vast majority of their depositors were not insured by the FDIC. So here we go. Here we're talking about a Swiss bank, and we're seeing issues in European banks as well as American banks. Ben, like, clear this up for me. I'm having trouble understanding how the banking system is so safe and secure like they tell me it is on the mainstream media.
Right. It's also interesting that they always seem to have all this bad news happening on like Fridays or like, end of the day on Friday or over the weekend. It's like, the timing must be that, they're just like looking at all these bad numbers going wrong throughout the week and they're just going shit, looking at the clock. And then, Friday, they like put out like a little press release. Oh, we're having a, interesting weekend. See you Monday. And then, have to go begging to the nearest, money
Central
printer.
banker. The nearest central banker. It really makes it makes my stomach, it makes me sick.
Mm-hmm. I mean, I guess, you were, I felt like you were starting to get towards the conversation of, I guess the short-term positives of, some people having their deposits saved versus the, bad trend of, why do we have a system that has such problems that we have to worry about bailouts?
Ways. You got to look at the macro kind of separately, I think. Mm-hmm. You got to look at the big picture because there's a lot of moving parts. And by the way, I think did I say 1 billion? It's actually a $3 billion. There was talk that it was going to be 1 billion, but it turns out that it's going to be something like a $3 billion absorption of Credit Suisse into UBS.
Mm-hmm.
At this point, it almost seems like the numbers don't even matter.
Yeah,
and that's
I'd
crazy.
say so. If the numbers matter, it'd probably be more valuable to look at the numbers based on like, what portion, not, rather than looking at, this many billions of dollars. Maybe it'd make more sense to look at the numbers as a proportion of, the actual markets or, fellow banks in some of these environments.
Well, if the central banks didn't step in, then these commercial banks would create black holes that would suck the whole financial system into it.
Yeah.
As happened in the Great Financial Crisis and the Great Recession.
So what's really going on would be like financial black hole whack-a-mole is what's going on.
Yeah, exactly. And it seems completely insane to me.
Mm-hmm.
So
yeah,
and by the way, speaking of crazy valuations, like the UK arm of Silicon Valley Bank. I didn't even know they had a UK arm, but that makes sense because they were such a major bank, 18th largest, and second largest to fail since Washington sorry, misquoted. But they're the second largest bank to fail since the Great Recession.
Mm-hmm.
And the UK branch of Silicon Valley Bank was acquired for £1.
Wow.
So, and that was, I don't know, like it's just complete insanity.
Yeah.
I don't.
Did they offer you that deal? Because you could have taken that.
I think wasn't it HSBC that bailed them out? I can't remember who took that offer. It would have been fun to buy them for £1. I would have been down.
Yeah, I mean your potential loss is pretty minimal at that point.
Right. Well, you're buying a black hole of debt, right?
Right, which I guess they're I don't know, maybe the black hole, if they purchase it, they can prevent the
Yeah, it
the
was
explosion.
Washington Mutual. I didn't want to. I didn't want to name drop Washington Mutual if I wasn't 100% sure, but it was the largest bank failure since Washington Mutual,
And
SVB.
Washington Mutual was the biggest one to fail in 2008. Is that right?
Yeah, that was the one that actually did fail.
Okay.
It collapsed in 2008. But so yeah, so UBS buying they're going to buy Credit Suisse, but not without the guarantee of the Swiss National Bank to effectively provide what how
I
much
think that
liquidity?
they're providing
100 billion.
up to 100 billion, yeah, of backup liquidity to both
Mm-hmm.
UBS and Credit Suisse for the time being. And yeah, they forced
Yeah.
through the acquisition against the law without the vote and input from shareholders. And it looks like they are forcing the deal at a price of anybody who has shares in Credit Suisse is going to get one share of UBS for every 22.48 shares of Credit Suisse that they owned as their payment. So that probably, like you said, sucks for them, but better to get forced into a crappy deal than to lose everything entirely from that micro perspective.
Yeah, and a lot of foreign investors are getting bailed out as well. I know
Mm-hmm.
that for a fact through in the case of Silicon Valley Bank and whatnot, is they have a lot of foreign depositors, and of course they're
Mm-hmm.
a part of the bailouts. I thought it was an interesting. I don't know if you caught this, Ben, but Janet Yellen was giving testimony in front of legislators, and this one I think he was a congressman from Oklahoma, asked he asked Yellen, what guarantee can you give for the smaller banks, for the regional banks, because you're broadcasting that you're going to make you're going to make depositors whole at these mega banks, and does that not lead to people feeling that their local banks are less secure?
Yeah, that's
And
an excellent question.
well, it leads to consolidation of risk into these banks that are too big to fail.
Right. And it's kind of creating like a two-tiered, financial justice system going on where
Ben cut out on me. I was going to go ahead and go to some interesting and spicy tweets for you guys. One tweet that I thought was real interesting to set the perspective of like how important the smaller banks are to the financial system. It was on Zero Hedge. I'll find it in just a second here. By the way, at Colby Noe, COLBYNOE on Twitter. Give me a follow back, y'all. I thought this one was all right. So here we go. I think it's in my likes. All right, folks. But effectively, the smaller banks make 80% of the commercial real estate loans. So it's crazy how they are willing to back up. Here it is. They're willing to back up the mega banks, but really it's the smaller banks that have greater exposure to commercial and industrial lending. 80% of commercial real estate lending. So here's the tweet, folks, and here's the graph from Zero Hedge. The Fed does not contain the regional bank collapse. If the Fed does not contain the regional bank collapse, there will be another Great Depression reading from Zero Hedge. Of course, that's opinion, but here's facts for you. Here's big facts. Small and medium banks account for 50% of U.S. commercial and industrial lending, 60% of residential real estate lending, 80% of commercial real estate lending, and 45% of consumer lending. How about that? Kind of important. The regional and smaller banks are very important to the economy. And that can't be dismissed. Moving right along, a couple other tweets I thought were worth mentioning. My computer's running a little slow. There's a couple tweets I wanted to mention just before we sign off. Appreciate y'all hanging in there with me. Talk to me, Twitter. I'll go back on screen when my computer functions. So, rough numbers. Apparently, the largest write-down of losses was a $1.3 billion write-down. And this latest write-down of this Credit Suisse failing or collapsing or getting bailed out due to imminent collapse is a $17.3 billion write-down. Just to put that in perspective, the largest before that was $1.3 billion. Let me open Twitter up again. It's not cooperating. And yet Bitcoin just works. A block is mined on average every 10 minutes. We're seeing more hash deployed to the network, and the hash number just keeps going up and to the right. And so the difficulty keeps going up. We're looking for another all-time high difficulty adjustment. And that'll be coming in soon. We're reaching new all-time high difficulties. All right, going on screen. Ben just came back, and we're going to wrap it up, Ben. If you can...
Hello, pardon my technical difficulties.
Dude, where are you? Your garage?
No, I moved down to the living room where I could plug my phone into what I think is a better phone charger. Even though I end up deciding that the safe thing would just be to pull it up on my laptop, which is what I should have done last time.
Bro, I'm gonna pull up a couple tweets, and then let's wrap this. Let's wrap this episode 7 up. Here we go. So, where were we? Here's one from Lynn Alden. I don't know if I can. There we go. I'm zooming in. So inflation. It's interesting to put inflation in perspective. Inflation from 2000 to 2022. Now, mind you, this is compounding for those 22 years, yeah? Gold price up 8.4% per year. The money supply is up 6.8% per year. So the supply of money, I think that's M2 she's using, 6.8% new money per year. Oil up 4.7 per year. The median house price is up 4.6 compounded for those 22 years. Education, 4.6% more expensive, tracking with housing. Medical services, 3.4. CPI, 2.6. So interesting that the actual CPI number is less, of course, because they're measuring a different basket of goods.
Because they intentionally choose not to measure the goods that actually go up the fastest.
Right. So it's interesting to get that perspective. She quotes Saylor, inflation's a vector. The price of scarce things tend to go up more in line with money supply growth, while tech and and offshoring make other things radically abundant, which pulls the CPI calculation down. But what's up with that? I mean, it's just interesting to kind of quantify these things. And
yeah, that's a pretty cool data set right there, really.
And if something compounds by 4.6 per year, then after 23 years, the price is 2.8x. So it's 280% up after 23 years. So we're seeing the real effects of inflation. What do you think, Ben? Let's this thing off. We could go on and on. We didn't get to the Peter Schiff article, but we can do real quick. Peter Schiff running Euro Pacific Capital. You know, us Bitcoiners love Peter Schiff. But his bank got shut down, and yet he's a staunch gold bug. He sells gold, and I've been listening to Peter Schiff since 2009. Like, and he got me into gold. So, me and Peter Schiff.
I feel like he was one of the major voices that I started listening to. Sounding the alarm not long after 2008 as well. Even though that was probably, 7 or 8 years before you and I met each other.
and he's complaining about bank regulations. He's complaining that they're printing too much money. His bank got shut down, and yet he doesn't see value. He doesn't see value in Bitcoin. And it's
he's just framing it that way to so that he doesn't lose any investors in his gold business.
You think, or do you think he honestly doesn't see the value in it? Because I'm curious. I don't know. His son is a Bitcoiner.
Huh. Yeah, I mean, I don't know, honestly, what he believes, but
of course,
I was just pointing out that he's obviously has to have some bias.
Certainly. And it's interesting though, his bank gets shut down, regulators, he complains about money printing, and yet you can't shut Bitcoin down, and Bitcoin is a bank in cyberspace. And with all these bailouts and banks failing and uncertainty and money printing, it's good to know that there will only be 21 million Bitcoins. It's good to have some of those Bitcoins secured. And it's good to learn more about Bitcoin every day. While things are falling apart, I'm feeling more certain than ever, and I'm feeling glad that I own some of the most precious asset ever. What about you?
I mean, me too. It definitely provides some peace of mind knowing that there's a robust, fully decentralized, system that's already in place and, functioning moment to moment, day to day, 24/7, 365, that anybody can choose to, utilize. And it was designed for everyone to utilize. So
amazing.
Hedge your bets.
I hear you. I hear you loud and clear, my friend. Thanks for coming on another show. I appreciate you. Appreciate all y'all out there. feel free to subscribe. Feel free to drop a comment. Let me know if you think that if you think we're onto something, or if you want for us to maybe touch on other topics, or if you think we are if you think we're totally wrong, then I'd be really interested to hear. I'd be really interested to hear that in the comments. I'm sure you would too, Ben.
Yes, absolutely. Fight me in the comments.
Yeah,
But no, I
absolutely.
really would. I think all feedback, constructive, critical, or otherwise, is valued, especially for you and me being some greenhorn podcasters or whatever.
100%. Which is to say, we appreciate y'all out there. Thanks for tuning in to episode 7 of the Sunday Satoshi Live. Ben, let's go ahead and sign out. Peace, love, and Bitcoin. Take care. Stack sats. Stay humble. This is Colby signing off. Thanks, Ben.
Amen. Thanks, Colby. Thanks, everybody.
Peace.
See you next week.